Hello and welcome to another weekly portfolio update. This week I deposited another £1,000 into my Trading212 ISA, which takes my current utilisation to 55%. I invested around £420 on that this week, and I'll continue to invest the rest over the next coming weeks. I started the week at around an 8% return, and then on Monday there was a rather rapid drop off to around 6% as the market sold off due to the scare in the Evergrande situation in China. However, end of the week we started to recover quite well, and then Friday was my buy day, and I finished at around 7.9%. So pretty flat week overall, but very, very turbulent. So a bit of a roller coaster this week. So let's look at how each of my holdings perform this week. We'll start off with the ETFs, and we'll start as always with Vanguard USA, which is my largest holding, and it has gone slightly overweight this week as I did buy more. I bought more despite the fact it was already at my target allocation, purely because I wanted to invest this week and I wanted to invest broadly. With the market conditions as they were this week, I just kind of thought dump it in an ETF, and I'm going to hold this forever. So there's nothing lost, nothing gained. Like if it's down this week or next week, we're in it for the long term. So as you can see, at the start of the week, we kind of fell below this 50-day average with like huge sell-off at the start, about 2 to 3% drop-off, I think it was. But end of the week we recovered. Unfortunately, I ended up buying this at the end of the week on the Friday as opposed to on the Monday. I would have bought on the Monday if I had the funds available. However, I didn't get paid until Friday, so I bought as soon as I could. So yeah, that's Vanguard USA this week, and not much more to say on that. So we will now look at Vanguard World, which is my second largest holding. Again, up slightly this week. I did buy one share in Vanguard World this week, despite the fact that it is also slightly overweight now. And I did that for the same reasons I bought VUSA, and that's just kind of risk assessment and just comfort in buying and holding forever. And very much similar kind of chart for Vanguard World, where we absolutely gapped way down below the 50-day average on Monday, Tuesday, and then recovered end of week. So it'd be interesting to see how Vanguard World especially goes if Evergrande does collapse and the kind of Chinese holdings within this ETF do get absolutely raped. But yeah, we will see what happens. Now on to the last ETF on my portfolio, which is EQQQ, which is actually slightly underweight on my portfolio now, despite the fact I did buy more this week as well. So EQQQ is down 0.17% this week, and as you can see, big red candles at the start of the week, but then slowly ramped up towards the end of the week. And in fact, it barely dropped below the 50-day average, much like the Vanguard World and Vanguard USA. So yeah, this is just another one of my ETFs that I will be holding forever. I think that wraps up ETFs this week, so we'll now look at individual holdings. So we'll start off with Google as always, and this week we are slightly green. We did have a huge drop off, and this is a very, very similar pattern I think across all charts this week, is huge gap down and then trend up. So currently Google kind of sits within these kind of markers that I've laid out. It's still on a huge uptrend. Though it did fall below on Monday, it did recover very easily. So yeah, still definitely long-term bullish on Google. And in fact, if the price is still being below, like down at this 27.50 range on Friday, I would have probably put the money I did put in ETFs in Google this week. As you can see, nice green stats across the board, as we are used to seeing for Google. And in fact, the 1 year return is now at around 100%, which again is just incredible. In the news this week, most news for most stocks is kind of insignificant when compared to the Evergrande crisis in China. However, this week Google did offer to settle an EU antitrust probe, and this again is like a weekly occurrence at the minute. Google is either being fined or is settling out of court. And I think this is just Google's way of like preempting the fact that they will lose the case. So they'd rather just pay it off now at a fee that they kind of think is reasonable, and then that is it, done and dusted. So it'd be interesting to see if the settlement goes through, and it'd be interesting to see what amount that is. But again, this is just another one of those weekly costs of doing business with Google at the minute. Huge lawsuits, pay it off, keep going. And yeah, that didn't really have any significant impact on Google's share price this week, not when compared to the broader market. So now we'll move on to Facebook, and big news out of Facebook this week, beyond the general market sell-off. Very bad week, I would say, for Facebook investors, myself included. And you might see that I've become slightly underweight on my previous targets. Though they did finish up on the day on Friday, they did have a down week, and we're down around 3% on the week. So if we look at the chart, as you can see, kind of market sell-off, start of the week, big drops, and then they just continued. Like this second drop here was due to bad news from Facebook. They released on their Facebook for Business blog that they were navigating changes and improving performance and measurement metrics. So this release was kind of a prelude to a bad earnings report for quarter 3. Kind of suggests that actually the impact of iOS is hitting them way harder than anticipated, and actually at the minute they estimate that they're underreporting their web conversions on iOS to advertisers by approximately 15%, and this is really bad news for Facebook. If advertisers think they're getting 15% less impressions or conversions, then they're going to want to pay at least 15% less for those ads. So a 15% hit on Facebook's ads on iOS, it's very, very significant, because iOS and Apple users are high revenue per user clients or customers for Facebook. So this is really bad news. This was also compounded by on the same day that the Facebook CTO is stepping down after 13 years. I don't know if these two things are related. I don't know whether or not this is part of Zuck's kind of metaverse future vision and restructure, but it does appear that way, because Andrew Bosworth will be taking over as CTO, who has previously been in charge of Reality Labs, which deals with Facebook's AR/VR kind of segment, and Oculus. So this is kind of good news if you see Facebook's long-term future in AR, VR, and kind of hardware like with Oculus. However, if you think Facebook should be focused purely on advertising and the core business, I would say that this is kind of bear news, and that's my kind of impression of it this week. It appears to be the market's impression. So at this stage, I will not be buying any more Facebook until quarter 3 earnings, unless we do have a significant breakdown, like to this kind of 330, 334 range. I didn't even pick up any after it kind of fell below this like interim marker for me, like which would have been a buy if it hadn't have been due to the fact that it was caused by actually bad news / potential change to fundamentals. So yeah, very bad week for Facebook investors this week, and this trend and these markers are completely dead now, so they can go. And yeah, it'll be interesting to see what the next week brings, though I think it's unlikely that we're going to see huge movement for Facebook now until quarter 3 earnings, which will be at the end of October. So yeah, that's it for Facebook this week. Now on to Amazon, which is still also overweight in my portfolio at 9.2% with a target allocation of 7.5%. No major news for Amazon this week. Just trading 1% down in the last week. Just continuously channeling in this 3,100 to 3,500 range. So I suspect that it's just going to continue to do this, maybe until earnings. So yeah, not a lot to report with Amazon. Now on to my minor holdings, starting with AMD. AMD up almost 2% this week. The chart for this is probably going to look the same as the others. So we had this drop off at the start of the week and then rose all the way through the week. I didn't manage to buy any on the Monday when it dropped below this 103 kind of threshold, as I had no real funds to do so. Good news for AMD this week. They have scored its highest ever CPU market share, or highest in years at least. And as we mentioned last week, Intel was having to cut its prices to try and offset AMD taking its market share. As we can see, AMD only has around 11% of the market share in Q2 and is currently at 16%, which shows like how much more room for growth there is for AMD. So this is very, very bullish for AMD going into Q3, and I suspect if they have a good Q3, we could jump way up to this 116 mark, or maybe even higher to 120 again. So yeah, just going to continue to accumulate AMD all the way through now. Now on to Coinbase, which is my worst performing stock, down 5.5% this week, and seems to be continuously down with never-ending bad news. We've fallen below this 240 kind of threshold that I'd marked out. I haven't bought any this week, though next week I will pick up some more if we're below this 240 threshold. So the bad news for Coinbase this week was China has declared yet again that cryptocurrency transactions are going to be illegal. I'm not sure this is going to make a huge difference to the long-term effect of crypto or the long-term prospects of Coinbase. So I'm not really sure why the market reacted so strongly to this, especially the crypto market. Like, I think Bitcoin crashed massively, as did Ethereum and the other major cryptos this week. But again, I think Coinbase are massively undervalued really at the minute, and they're going to have exceptional Q3 results. So I shall continue to maintain my target allocation for Coinbase, and hopefully I can make up some of the losses once they release their Q3 earnings. And finally, on to my smallest holdings, which are the leveraged ETFs. First up, the 3 times daily S&P 500, which was down 0.26% this week. And if we look at the chart, you can see a huge gap down here as the market crashed, and I did in fact pick up a very, very small amount on Monday, as this dropped, I think, almost 5 or 6% on the day. So I picked up a really, really small fractional amount, and yeah, paid off as it recovered towards the end of the week. And the other one this week was the 3 times leveraged NASDAQ ETF, which was down 2.5% this week, so more significant the S&P 500. And much the same story. Huge drop off on Monday. I did pick up another small amount in this, and we had some decent recovery towards the end of the week. Right now, these are very, very small holdings in my portfolio, making up just over 0.1% each, but my target allocation for these is probably going to be 1.5%. So yeah, it'll be interesting to see how these go as I build a position over the coming weeks and months. So in summary this week, I invested around another £420. I have an unrealised gain on the week of £2.36 or 0.01%. My projected return for the 2021 year is 14.41% currently, so still below that 15% kind of ultimate goal I had. But yeah, not a bad week overall, dead flat. And as we can see, with a 14.41% projected return, if I can average that with £1,000 a month addition, I should be able to retire in 18 years at the ripe age of 47. And I'm currently 2.79% of the way to FIRE, so all in all, pretty decent. So thanks again for watching. Please like, subscribe and comment, and we'll see you next week.